Hello and welcome to today's stock market analysis, December 21st, 2023. So let us begin by looking at the S&P 500 again. We always want to begin by looking at the major indexes. Alright, yesterday we had a very large red bar, and this usually is something of a concern because we haven't seen this kind of red bar for a very long time. If you look from the lows here up to the highs of here, we have not seen a big red bar, right? Compared to the one here, we have red bars here, we have a red bar here, but mostly it's very large green bars. And even if there's a red bar, it's very small. So yesterday's one was a quite large one compared to the usual, and that's something we need to take into consideration because this might begin a reversal back down to this support area. This is the support area, and if it continues to correct, there is a possibility for it to drop down to here before bouncing back up. Now, having said that, every correction now is a buyable dip as far as I'm concerned, because we are in a very strong uptrend. We just don't know whether it will continue to trade sideways, rest, meet the 20 MA and then break out higher, or just correct down here. So we need to look at the 60-minute chart to get a closer look of what is happening in the smaller time frames. So we have this ascending triangle breakout. I'm just going to draw it. And you can see yesterday the S&P 500 just slashed through the top of this ascending triangle and go way below here, actually broke below the lows of this pattern. So that is something of a concern. And if we continue to see the S&P 500 drop below this 200, we do not want the futures to drop below this area, because if not, there's a possibility that it's going to go down from here. So let's take a look at the SPY. Yeah, the SPY has already shown weaknesses yesterday. Remember I mentioned about this double top. It didn't materialize, but it went up, and then it is breaking below this area. So if it continues to go down, it has already dropped below the 50 MA. If it is unable to move back up, it's gonna go down and meet the 60-minute 200 MA. So that's something for you to think about, because correction can come, and sometimes it can come very rapidly. So a daily chart, you can see one big bearish red candle, which is bigger than all the red candles before it. So there is a possibility that it might just drop and go down to this area of support. So this is a area of support as well, and most likely, just put green color. Alright, this support area. So if correction continues, it will drop to around here, where you might want to look for positions to buy stocks. Let's take a look at the stochastic MACD's indicator. Back to SPY. Nothing much to tell us, so let's go back to our basic chart. Diamonds are showing very extended and a very big red bar yesterday, so it's getting a bit more dangerous because it's dropped below this support area, this recent support area here. You can see that it has already dropped below this support area and slashed through the 50 MA. So if it doesn't go back up this area, there's a likelihood it will go to this area here and meet the 60-minute 200 MA. So we are possibly in the midst of the start of a correction. The QQQs are also in a very dangerous position because it has dropped below the 60-minute 50 MA. The daily chart shows that, wow, there's another big red bar here, almost equivalent to this size. And if the support around this area cannot hold, this is the support area. Right, this is support area here. If the support area cannot hold, there's likelihood it will just correct back to the 60-minute 200 MA. So now is not a very good time to buy stocks or swing trades because the market is overextended, and you want to see for it to correct sideways a bit, set up a continuation pattern, or possibly drop down to this area. Okay, this is an area where it had an ascending triangle breakout in the Qs. So there's always a correct time to buy and not to buy stocks. So when you bought this some stocks here, because the market were rising, it was a very good time to hold the stocks. But now it's a bit extended. You either want to see another continuation pattern here or wait for it to drop below here. So if you are holding some stocks or swing trade, right, because it's overextended, you might want to take some positions off. So all in all, we just want to be cautious because this might be the start of a short correction. Okay, the daily trend is still intact. Okay, there's nothing wrong with it. Okay, it's just the short term. Sometimes we have to be a bit careful because timing is very important in the stock market. You can see this big red bar. It might be the start of a deeper correction pullback until here. So thanks so much for watching. Hope this market analysis helps you in timing the markets, and do subscribe to my channel if you find it useful, and press the notification bell for new materials that I put out. And do visit my website, thestockmarketanalysis.com. And I'll see you in the next one.